All right, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to talk a little bit about the rate hikes because, of course, today is the kickoff of the FOMC meeting. I also wanted to show you a bunch of bearish sentiment that's out there, which I continue to champion the idea that we will see this act as fuel for a melt up as the markets front run a pause in rate hikes. Then I'm going to show you a whole heap of Bitcoin news, which is really encouraging, and then we're going to get into some charts and technical analysis. So if that sounds like something you're interested in, sit back, relax, hit that like button, and let's get into this. Just before we start, I want to answer a question that I had on Twitter. Twitter limits me to a bunch of characters. You know how it is. It's difficult to get my point across. So I thought I'd just address this for you real quick. Christopher here wants to get my thoughts on Apple. He said he looks poised to break out, but am I not concerned that it's going to hit weekly resistance? I did half answer this, but I thought I'd just give you a bit more detail. I guess it will come down to earnings this week and maybe the Fed. Also watching your melt up content, as well as another who says we're about to reverse. So let me make something clear just to start off. Whilst I think the melt up is still in play, whilst I think this is being validated, I have no idea what's going to happen. Nobody knows what's going to happen. So if you want me to tell you, we're definitely going to do one thing or the other, I just can't do that. All I can say is we have to take it one day at a time and see how it comes. In terms of Apple, I'm quite lucky that I got a breakout above this box back here, as you can see. So breakout retest, I got long here, almost got bear trapped and reversed here, but then the market shot up higher, as you can see. And since then, it continues to make higher highs and higher lows. For me personally, I'm not so much worried about the overhead resistance. There's always, in an uptrend, particularly when we're not breaking out to new all-time highs like we aren't just yet, there's always overhead resistance. So for me personally, I like my line in the sand as this upward sloping blue support line. So long as we're holding this uptrend, then we're still in an uptrend. And it's as simple as that for me. So if we continue to hold above this line, if we continue to move up, perhaps because the earnings come out to be good, then I'll continue to push this trade. However, if we start to close below this upward sloping blue support line on a daily closing basis, that for me is the exit for the long. So it's really no more complicated than that. It's a very momentum-based strategy. I will never ever sell the top. I will always end up, because say this is the top and we roll over and break down, then I'll end up getting out here. So it's a momentum-based strategy. Like I said, I'll never actually sell the complete top, but what I tend to do is get in as early as possible and then try to capture the bulk of the move. And of course, if earnings are good and this shoots up, then the trend line break will come much higher up, and I would have caught most of this move right here. So it's really as simple as that. I hope that answers your questions. Of course, if anyone ever has any questions, hit me up on Twitter or throw it down in the YouTube comments and I will do my best to get back to you. So of course, FOMC has kicked off today. We will get the rate hike announcement tomorrow. Currently, markets are pricing in a 96.8% chance that we're going to see a 25 basis point hike. So long as we get a 25 basis point hike, we can expect the markets to continue to front run the pause, which is largely priced in as of next month. You can see if I click forward to June here, markets are currently pricing a 73% chance that this 25 basis point hike today will be the last hike. There's just under a 25% chance that there will be one more 25 basis point rate hike thereafter. And so hopping back to my melt up chart, you can see I've been postulating that we will see the markets melt up as they front run the pause in rate hikes. Pauses, historically speaking, are bullish for risk assets. It's cutting rates that you need to use as your exit signal or even potentially short signals. If you're unfamiliar with this video here, I've got answering your questions. In here, I do a detailed analysis where I show you how, historically speaking, when the Fed moves a pause in rates, the rally in risk comes on strong. We enter this blow off top period, and then it is the onset of a cutting rate cycle that causes the downtrend and the big explosion in risk assets. This is what this is expected to play out. As you can see, I've had this here marked since summer, where we get a pause, a melt up scenario, and then I said, do they cut here at the top? And is that one of the catalysts that sends this market into the Great Depression 2.0 that most people have been championing all the way since summer of last year? Of course, we have not had a 2008 style plunge yet. I'm open to all outcomes. By the way, this is by no means me saying this is going to happen. Let me make that clear. I don't know. It's a one day at a time situation, as I keep saying. However, things do look encouraging. Euro stocks are at all-time highs. The Nikkei is at a 33-year high. The US is breaking out from its February highs. That's to be determined. It's not quite done that yet, as you can see, but it wants to, and the NASDAQ has already done it. And we've got the largest short position in 11 years. Okay, so right now, it's crowded to be bearish. Right now, the majority is expecting a dip. That means if we do indeed get a crash, this will be the first crash in history where the majority of market participants all got rich. Said another way, here's the sentiment, and you can see it's the most net bearish to date based on the poll. This shows that short-term and long-term positioning is massively bearish. Bull markets are built to climb a wall of worry, and that wall of worry is certainly present. We also have current bearish sentiment. They are slowly starting to capitulate. How much longer can you allow us to rally? I mean, what are we up here? We're up something like 20%, almost 20% in the S&P 500, okay? 20% off the lows. How much longer, and this has of course been going on since all the way back in October. If you're a bear, how much longer can you remain short? Now, if this starts to roll over, then of course the shorts can pile in, the shorts can start to average their positions and slowly perhaps start to gain some momentum. But as it stands, being short has got to have been very, very painful. And we're starting to see the flip. This guy here, for example, he says he's run out of bearish narrative. Most likely he's been wrong, and it's highly likely he will capitulate next week. The market is bigger, stronger, and more solvent than him, and me, and everybody. Remember, markets can do irrational things for much longer than you can stay solvent. Just acknowledge that. If you've been a bear, it's not the end of the world. There is still time to react to the chart in front of you. There's also this rhetoric going around that you should sell in May and go away. And maybe that will turn out to be true. But the data is the data, and I have been beating the same drum for a while now. Did you know the S&P 500 has closed higher 9 out of the past 10 months of May? So in the past 10 years, in the past 10 Mays, 9 of them have closed positive. So this whole rhetoric of sell in May and go away just isn't supported by the data. James here says that we have reached thrill. Now, I have to disagree with this. I do not think we're at thrill. I think there's far too many people that do not believe this rally. Disbelief, perhaps. I think that realistically, we have come out of disbelief. We have got to hope, maybe, and we're about to enter optimism. I think once, assuming we can break this local high, assuming we can do something like this, maybe pull down into a cycle low and then start to build. Once we take out this high from back here, I think at this point we will enter optimism. I don't see how you can remain short all the way up here as we've taken out all of these highs, all of these, and this major one here. Okay, at that point, we will only be something like 10% away from the all-time high. So at that point, the majority of market participants, even the most bearish among them, are going to have to admit that they were wrong. Again, we need to take it one day at a time, but so far, I don't really see the bearish narrative as of yet. Of course, the Fed can come out and spoil the party, but what if we get a 25 basis point hike tomorrow, followed by language that indicates a pause is coming? Well, of course, the markets are going to front run that pause as they always do. Once we reach optimism, belief, thrill, and euphoria come extremely quickly thereafter. Over in the Bitcoin world, things continue to look very encouraging. Google Sheets have added Bitcoin data, as you can see right here. So we continue to see adoption, and I'm sure we will continue to see continued adoption. Over in Texas, their university is teaching classes about Bitcoin now, following in the footsteps of the likes of El Salvador. Over in Prague, in the Czech Republic, dozens of shops and merchants are now accepting Bitcoin. And the Kingdom of Bhutan announced that it spent 5% of its GDP to buy Bitcoin miners. So they did this all the way back when the price was $5,000 per Bitcoin. They have quietly been allocating their GDP to Bitcoin miners to amass hash rate, to continue to attempt to gain a competitive advantage as game theory plays out, and they have been stacking Bitcoin. It begs the question, doesn't it? How many other countries and nations have been quietly amassing hash rate and stacking Bitcoin? Speaking of Bhutan, they have confirmed that it's mining Bitcoin with renewable hydropower that has no carbon footprint. They simply hook up generators to this massive dam, and they allow the natural gravity to push the water out, spin the generator up, and they use that generator to power their Bitcoin miners. They get free Bitcoin from this process. The Bitcoin network continues to do Bitcoin things. Bitcoin just hit a new all-time high for confirmed transactions per day, as you can see here. So we have more people using the Bitcoin protocol than ever before. And there's something poetic about this, because Bitcoin just so happened to set a record daily transaction on the same day that the US government engineered a mega bank bailout. The banking industry continues to reverse fork itself into just 4 entities. As you can see here, pause your screen and take a good look at this. How much longer before we only have 4 major banks in the US? I would speculate here that this has likely been engineered. Speaking of banks and craziness, did you know Argentina's pro-Bitcoin presidential candidate actually destroyed a central bank piñata on national television? Just check this out.
Tranquilo, con tranquilidad. Simple. Cuidado, chicos, córranse. Pará. No, pará, cuidado. No, cuidado. Pará, acá, pará, ahí. Pará. Bueno, basta. Pará. Ahí está.
Listo.
Pará.
What a time to be alive, hey? What a time to be a Bitcoiner. Bitcoin is still the exit. And one last thing before we move on to some charts. The yellow arrows aren't halving dates. These are liquidity signals which preceded each parabolic advance to new highs in Bitcoin. So there's still this narrative, isn't there? There's still this narrative out there that halving drives price, that halving engineers the 4-year cycle in Bitcoin, and that Bitcoin is going to continue to do Bitcoin things that it has done historically speaking. Meaning it's going to start to reject somewhere soon, base out until the halving, and then it's going to go parabolic before entering a 12-month bear market. If you've been on this channel before, you know I am not currently in the camp of people supporting this idea. I actually think we're going to have a blow off top that tops this year, and then we're going to spend the remainder of the 4-year cycle in a 3-year bear market decline before we can go again. As ever, open to all outcomes, one day at a time. If you're unfamiliar with that concept, I have plenty of content on it. You can go and find that. Hopping into some charts, it's kind of the same old story from me. Unfortunately, I don't really have much more to say than what I've been saying over and over again. We're still playing patient here. Patience seems to be being rewarded as far as I can tell. So the dollar, probably waiting to see what happens to the rate hikes. Some level of counter trend bounce, perhaps. But ultimately, I do think this is going to move down here and then break down and target the mid-90s before too much longer. Yields continue to do a whole heap of nothing, as you can see, sideways for some time now. They probably know, like everyone else does, that the Fed is much closer to pausing rate hikes than it is to continuing. It's the same story from the 2-year yield, as you can see, sideways. And if I hop into TLT, we are still in this sideways range. Here's Bitcoin. Bitcoin continues to do Bitcoin things. If you were a viewer of this channel, if you were a subscriber of this channel, if you paid any attention to what I'd been saying about the 60-day cycles for Bitcoin, you would have avoided being caught on this pump. You would have avoided being wrecked on this dump and this one, because we all knew what was coming. We all knew that most likely once we got down here, a counter trend bounce that then resolved to the downside, making a cycle low around the 9th of May and getting ready to come out of here swinging. That seems to be playing out just as expected, just as the cycles told me it would. So for now, there's not much more to do apart from wait patiently to see how low down this cycle low forms, whether it's here, or all the way down here. And then Camel will be looking to add more exposure out of that cycle low wherever it forms and be targeting more upside over the next 60-day cycle. Still pushing these crypto-related equities. Of course, if Bitcoin is going to trend down into a cycle low like I expect it, then we're probably going to see some downside from MicroStrategy before coming out of his swinging. Same is true of Riot. We'll probably see something like that. And for Marathon, we'll probably see something like this. But that's fine. Again, I'll be looking to add exposure and move the stops up as we come out of those cycle lows. Already covered Apple. So as you know, this is the line in the sand for me. So long as we're above this blue upwards open support line, then I remain long and strong and continue to push. Nike starting to gain a little bit of momentum. It's the same deal as Apple, really. Lose this upward sloping blue support line, and I don't want to be anywhere near longs, but all the while we're above it, then it's reasonable to expect Nike to continue to slowly work its way up. IPX, I've been calling this out on and off for a trade idea for a while. It looks to me like if we can get a daily close out of here, and preferably even daily close retest and resumption, then this could be a long, and the long from me will look something like this for IPX. So stop here if you want it to be really safe, maybe here if you want to go tight and you're okay with hopping in and out. Some people are not very good at hopping in and out, they get worn out. But if you're okay with getting stopped once and then hopping back in if it breaks out again, then you could have a stop much tighter. If you wanted to play it safe, then have a wider stop. And of course, adjust your position size down so that you're not taking on additional risk by having a wider stop. But expect me to tell you I've gone long if we break out of here. It looks like it's trying to do this today. So I'll be watching to see if we get a daily close outside of here. And if so, I'll probably buy it into the close. And lastly, the S&P 500. So it's interesting, isn't it? To be honest, I don't have the clearest read on the S&P. Get above here, and I personally have to respect that that is a long. If we can break out above this local high, then we are continuing a powerful uptrend, and I want to be involved in that. But the cycle count tells me that we should be open to seeing a pull down into this cycle low due around the 9th of May in line with Bitcoins as well before coming out of here. So that would be my preferred look. That's what I'd like to see. Then we would have also a breakdown, retest and resumption off of this upward sloping yellow support line. But now though, I'm playing patient and seeing which comes first, whether it's a breakout above those highs or whether it's a decline into a cycle low and then bounce out of there. If so, then we can put a long on somewhere around here with a stop around here. Still got my NASDAQ position, as you can see, got a nice entry from all the way back here, so I can tolerate a bit of a pullback if the cycle lows are going to come in the stock market and then rocket higher. I've no problem holding this trade unless we lose this upward sloping red support line, but all the while we're above that, long and strong continue to push. And the Dow Jones, natural reaction right into the underside of this box, that makes perfect sense. Whether we've got to do something like this and then build and come out of here, that of course remains to be seen. But again, got such an early entry on this position that I got no problem waiting to see how this unfolds up into that 9th of May timeframe for the cycle lows to form. And lastly, gold. What a boring position this has been. It's completely sideways for over a week now. So the cycle low tells me that we should be about to get a 2 or 3 day sharp decline down into that 9th of May timeframe before coming out of here. But as of right now, we continue to go sideways and we continue to take it one day at a time. Silver, right around break even. Again, another very slow and boring trade. Not exactly what you want to see out of silver, but for now, it's still in and I'm still long and I continue to push. So that's it from me. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, turn the notifications on if you want to continue to get updates on all these markets in real time and how I handle them as a pro swing trader. In the meantime, patience, patience, patience. There's no reason to go rushing in, I don't think, at least until we've seen the rate hike. Keep your awareness for the cycle lows because they would have certainly kept you out of trouble had you have paid attention to them. And this time next week, I think it will be time to start shopping for some longs across the board. And of course, I will be doing that for you live on the channel. So in the meantime, take care from me. All the best. Cheers. Bye.